Welcome back. Let's take a look at those moves coming in on precious metals as well as commodities this morning. Gold making a fresh 11-year high. We've got silver jumping to a 7-year high, and crude at the highest level that we've seen since early March. Peter McGuire joining us this morning. Peter, let's talk about the precious metals first and what's leading to this charge. Is it the weakness that's building up in the dollar? Because, we're actually seeing some of the safe haven buying in line with what we're seeing on the equity markets.
Well, good morning, Aabha. Yeah, I think a couple of things. First off, there's no doubt. I mean, it's the softness of that US dollar, which has been very evident since Friday. It's also President Trump's re-election campaign. That's really starting to gain traction as far as a global voice and where his election is very much centred on. So I think that there's fear, uncertainty, and naturally that feeds into the euphoric state as far as as far as gold. So had a great rally to the upside. We know it's been all-time highs in British pound, yen, and of course the euro. And now it's got King dollar under attack, and that's forcing it up.
Okay, so that's on the precious metal. Immediate outlook, what's your sense?
I think...
How much further from here?
Look, there's no reason why in the short term. I think over the next month or two, a very much a 19 to 1950 sort of handle. It's currently at, 1855, 1860 now in trade. I'm just looking at a screen. So that's got the potential to really ratchet up a lot higher than where we are. And it depends on how aggressive President Trump wants to be on a global footage as far as the relationship with China and so on. So that seems to be a big outside overarching mindset, which is gaining traction by the hour. I don't say by the day, but certainly by the hour, Aabha. And we've got an election within 100 days. And every analyst in the world is saying it's only going to be fought on one agenda, and that agenda is China.
Interesting. Okay, so, all right, so lots to consider there, of course. Let's just touch upon oil as well, and then I'll probe the China angle if we have more time. But oil also up about 3%, vaccine hopes, EU deal. What's your outlook when it comes to crude as well right now?
I'm not necessarily thinking that it's got long legs to run. I think it'll consolidate around these points, and the reasoning quite simply is US dollar comes off, crude goes up a little bit, but more importantly, it gives the opportunity for the US shale producers to kickstart their dramatic engagement, and that would be dramatic in the point where if you see crude at $45 to $50 a barrel or higher, then you've got all of that production capacity to come on market. And as you know, and you've been following the market for many, many years, you appreciate the elastic nature of that workforce that's engaged in shale. At $40 a barrel, if it costs you $43 to pull it out of the ground, you go and work at Uber. And then all of a sudden it's at 44 or 45, you go back on your rig and you start ratcheting up, and if it hits higher. So that's the great unknown, how quickly the US can impact as far as production numbers and really come back as far as engaging in this whole oil crises that we play in. And how deep is the pandemic? Do we see a second stage, third stage, or the ratcheting up of further lockdowns, which greatly crater and demand destruction across that energy sector, Aabha?
Absolutely. Similarly, when you mentioned the second wave, important to see how that plays out as well, because currently the macros from China, in fact, are very much intact. And as you alluded to earlier, helping, the kind of prices that we're seeing on gold right now. Peter, I know you said in the short term you don't see too much risk, but even in the long term, if we do see any kind of global mishaps, wouldn't that only strengthen the case here for gold as a safe haven? So net, I mean, if you're not buying gold yet, it's probably either too expensive or perhaps you should look at some way of having it as a part of your portfolio.
Aabha, your great nation is probably one of the most aggressive hoarders of gold in the world. and it's deeply embedded in your civilization, and that's over many hundreds, if not thousands of years. So I really think that the world will catch on to what India's appetite is, and certainly China's, as far as gold, because of the debasement of currencies. You're looking at zero interest rates on major economies in the world, and the upside and the fear leading into the market. I don't necessarily think that euphoria will stay in the market. I think it's a falsehood. That's been running now for 90 days since the middle of March, end of March, early April, maybe even 100 or 120 days. And that euphoria eventually dissipates. And I think that if these lockdowns start to ratchet up, they're certainly ratcheting up in some quarters of Australia, and there's no doubt that it could affect our largest state, which Sydney is the capital. There's fear entering the market again here. I think that contagion can enter a market quickly across Asia. We hear the numbers coming out of India, and they're catastrophic. So there's no solution out there. And the only point that's going to be a saviour that gold would take a reversal would be if you get a vaccine. And then tell me how quickly you're going to ratchet it out across 7 billion people, Aabha. Be a lot of injections, going to be a lot of busy doctors and nurses, Aabha.
Yes, there are, Peter, and in fact, we were just speaking to Adar Poonawalla about that last night, about the kind of numbers and the millions of doses they're going to be churning out by next year and how it's going to get to the people. But yes, a lot of questions that still remain. Thanks so much for joining us this morning, and we look forward to speaking with you again.